Okay, so when they do, please, hey, focus. When they do this multiple choice things, they are always testing the following. They're always testing that you know the difference between direct and indirect, right? And they're also testing that you know the three departments: factory overhead, admin, sales and distribution. It's always about that. So now they say here, can you see? Factory overhead, admin, sales and distribution. It's your three departments. Direct material, direct labor. So let's see. Salaries paid to the workers involved in production. It's direct labor. Cost of raw materials used in the production process. Direct material. Advertising goes to selling and distribution. Rent paid for office. As soon as you see the word office, it's admin. Salary paid to the factory foreman. Can you see it's indirect labor? So it's factory overhead. Next one. So now we talk. Wheelie. Do you think they're selling something that's on wheels? Wheelie manufacturers. They produce washing machines. Wheelie, it's like a wheel, and sells it at a markup of 70% on cost. They use the perpetual inventory. So the next thing we're going to do, can you see here, they say they use the perpetual inventory for finished goods and the periodic for raw material and indirect now. So you'll see here they talk about two different things. They talk about a perpetual inventory and a periodic inventory. Is there anybody who picked that up? Or did you just start with required? You just started with required. So this is going to be a topic that we're going to do after budgets. Basically, it's just two stock systems, how we treat our stock. So up until now in our lives, we have done the perpetual system. Meaning every time there's a sales, we calculate cost of sales. Meaning if I draw up a trading stock T account, there's a cost of sales. I can at any time look at my books and know how much stock I've got left. Periodic is the one where I don't have cost of sales as a T account at all. I just literally do stock tax. And then I assume what I do is I take the opening stock take, the beginning of the year, plus the purchases, less what I have left, and then I see, oh, that's my cost of sales. So I do a calculation with stock take. Okay, that's all it means. It's not going to make any difference in the way that we do the books now. Okay. Not that it bothered you, but now you know it was supposed to bother you. Because okay, raw material account for the year. Okay, so I'm someone going to do it here. Raw, okay, no, I'm not going to. Huh? Is there an answer sheet? Yo, the person who set this up is awesome. Okay, here we go. So raw material, I already have a balance. So I know this is basically stock. Ne? So if I go look, opening, do they give me an opening? Yes. They say my opening is 95. And they say March 31st. My closing is 110,500. So March the 1st again. Oh, this would be most probably February 28th. Ne? March the 1st, 23. I will have a balance BD 110,500. Raw material purchased on credit. So meaning on credit, it's creditors control. Ne? 521. Cost of transporting was paid cash. So that would be bank. 29.5. And that's all they tell us, nothing else. So now I can just balance my account on work in progress by saying the two sides need to be equal. So this side 95 plus 521 plus 29 less 110 gives me 535 Dalmatians. Okay. Next they want me to calculate direct labor. So direct labor. Now remember, you always want, I'm going to focus. Here we go. Okay, so direct labor, remember, most of the times the labor gets a wage. Please listen. So if it's a wage or a salary, I always want the gross and the contribution, right? If it's a wage, I know the gross would be norm and overtime. Okay, so now let's go have a look. What do they tell me? They say wages paid to factory. What? They ask provide workings for direct labor cost. Now they say wages paid to factory workers was 300, 800. So what did we calculate? Was there any other thing going on? Oh. Do you think, yeah, that is more now there. 20 casual workers were also employed. I think this is extra. So 20 workers were employed in the factory to assist with maintenance and cleaning. This guy's here is factory overheads, right? Okay, so I don't see anything else. There's my direct labor. What did I miss? Number 5. The amount for wages includes the employer's contribution in respect of pension fund of 28 for the foreman. So I need, thank you so much. So I need to subtract 28,000. Everybody with me? Are you more awake than I ever was? Okay, so this gives me 27. Okay. Now I need to remember that for factory overheads, because the factory foreman needs to be added 28,000. Okay, so now they want me to do factory overheads, and can you see they somehow give it to me in the form of a note. So I know salary, factory foreman, I have to remember to add the 28. Okay, now let's have a look. They say salary paid to the factory foreman was 105. Okay, so let's add. Gives me 331. Then wages, for the cleaners and whatever. You can say cleaners, or you can just say indirect wages. It's fine. So let's go do that. I have 20 workers, that earn 25 Rand an hour for 140 hours, and it's only norm time apparently, So what does that give me? 70. You are also welcome to show all of this as one thing, where you say indirect labor, and then you just show that you add all of this together. Also welcome to do that. So we've done raw materials, transporting. Indirect material. What's the name for indirect material that we know? Consumable stores. And consumable stores, we always draw a little T. We have an opening and a closing, whatever I buy, and whatever, factory overhead, admin, however they do this. So they give me an opening of 2,500. And please, if you do T's, make sure you do it in the vicinity of the answer book, that I can see it and mark it. Don't do it on your question paper. Okay. Then I also have a closing of 18. They say we bought cash 77,500. And that's all. Nothing was returned, nothing happened. So how much goes to factory overheads? So all the exercises so far, it balanced on factory overheads. But it can also be that they say a third goes to factory, another third goes to admin, another third goes to sales and distribution. Then you have to do the ratioing. Always remember, adjustment before ratio. Remember that. Okay, how much? 1,000. 18,000?
80.
Okay, here we go. Next one, I see. We've done all of that. Commission paid to sales staff doesn't go in. Maintenance for factory equipment definitely goes in. 48. Water and electricity, 21,000. Amount of 3,280 still outstanding, and we allocate 4 out of the 5 parts to factory overheads. How much is that? 11,19,425. Can you see? Adjustment before ratio. It's just a technicality, eh? Okay, next one. Rent, 108,000. Must be distributed according to floor space. The factory does 2,400, ne? And selling and distribution takes the remaining 600. So the floor total is 3,000. You can break it down to 24 over 30, to 6 over what? 6 over, no, you can't do 6. 3 over 5. What do we get?
86,400.
Okay, depreciation for factory equipment, 6,500, and there's nothing else. So let's bottomize this thing. What do we get this? 497,324. Okay, direct material cost per unit. So I'm going to write it like this. Direct material cost per unit. Okay. Is it already a next thing? Yeah. Usually these things is a separate case study. And now it's VV table manufacturers. Okay. So now if I see you are provided with the info relating to VV table manufacturers, the factory manufactures wooden catering tables. Calculate the direct material cost per unit. So you want to see the direct material cost. Remember, the direct material cost is the part that is issued to the work in process. Ne? That's the amount in work in process. So they say my total cost is 7,689.60. How many units did I produce? So I say this nice and loud. You always use the produced units unless they ask selling price per unit. It's the only time you will use the sales, the unit that was sold. The rest, it's always the units that's produced. Okay, 4,320, and that gives me, sure, am I very boring?
178.
Okay, next one. Calculate the break-even point in units. Here we go. Total fixed cost over selling price per unit less variable cost per unit. So my total fixed cost If they don't give it to you, you always remember fixed cost is factory overheads and admin, né? And this is the total, it's not the per unit. So, the bottom, selling price per unit, variable cost per unit, gives me a contribution of 155, is that right? So what's my break-even point? Okay. Next one, they say, should the business be satisfied with the units manufactured during the current year? Explain by quoting a relevant figure. So you can do it as follows. You can say production was 4320. Break-even point was 3345. So the business makes profit on how many units?
975.
On 975 units must be satisfied. Okay, everybody with me? If you say they are making a profit, you can say they shouldn't be satisfied because this profit isn't enough. Then you'll also get marks. Okay, can go both ways. The direct material cost per unit was 152 in 222. Explain two reasons for the difference in the cost. So in 2022, it was 152. We have now calculated 2023. It is how much? 178. So it increased, nay. Now, I want to quickly show you the different ways that I can say this. It increased with how much rand per unit? 26 rand per unit, né? Or you can say it increased with what percentage? How will I calculate a percentage? I will do the man in the hat. So the difference is 26, né? The original is 152. So what's the percentage increase? 70. No. Yeah, but 26 divided 152. It can't be 7. Oh, 17. Yeah, that makes sense. Okay, so they didn't ask you for figures. So don't waste your time with this. I just wanted to bring this into the video if you do a revision that you know. Okay, they literally just ask you the difference. And what is always your two reasons? You've already, I said you must write down for yourself when they talk direct material, you have two reasons. So what is your two reasons? Oh, please. We've done 9 exercises now. Let me just stop recording before you embarrass yourself. Supplier. You changed supplier to a cheaper supplier, to a more expensive supplier. Because can you see, you can't say it's because of inflation, because it's way more than inflation. What's the other one that I always said? Wastage. There was more wastage. Okay, don't you dare have this wrong in a test. Define break-even point in your own words. It's the number of units needed to be produced and sold, because it doesn't help that it's just made, to cover total fixed cost. No, because once your fixed cost is covered, it means now you only have to worry about the variable cost. And the variable cost will always give you a contribution if you subtract it from the sales price, yes. Yes, always. Any other questions? Is this the end of question 9? Ah.